when you guys are in business, and just throw these ideas out there, what is something that keeps you up at night? What are your concerns? What could happen that really makes you worried about the financial success and stability of your business? Give me some
Being
ideas.
sued.
Being sued, okay. From what? For like what kind of thing?
So my concern would be, I want to do farm to table. So my thing would be the food in the back,
Okay.
and then when the food was prepared.
Okay.
So, you have to have quality control here, and
Yep.
you have to have quality control here.
Okay. What else? What else concerns you guys have in your
If
day-to-day
something
business?
happens to me as the owner,
Okay.
where would the business go?
All right.
If
So
I was an accident by, debilitated and or deceased.
okay. Okay. What else? Gotta be, ladies. There's gotta be more that keeps you up at night. What are you guys worried
Losing
about?
product,
Losing product.
losing product from a store,
Yep.
refrigeration.
Loss of income, things like that. If you do something wrong and someone sues you, a lot of contractors, if you build a home in the drywall, I'm sure you guys have seen that. What was that?
Delivery.
Delivery of the product. Okay. All right. So all of that can be covered by insurance. So the basics of insurance are going to be your general liability, commercial property, workers' compensation, commercial auto, and then you have errors and emissions insurance. So general liability is going to be your typical slips, trips, and falls, guys. So you walk into a building like this. This building has general liability. If one of you tripped over a cord and you hurt yourself, or in the restaurant, or like you said, in a business, I know that Genesis Block has a lot of people coming in. If they hurt themselves, what kind of coverage is that? That's your general liability coverage, okay? So that one's gonna be based on two different things. It's either based on your payroll or it's based on your gross revenue. So when we write a policy, we're looking at the estimated upcoming year for those two numbers. So if you're wanting to start a business, it's gonna be based on your projections. If you're in a business, it's gonna usually be based on what was last year, okay? Now let's say as an employee, you got hurt, all right? That's gonna be your workers' compensation. So in the state of North Carolina, the law is that you have to have 3 or more employees for the workers' compensation law you're required to carry it. However, okay, this is the kicker. If you're a company, let's say your company is ABC Inc., okay? The owners of the corporation count towards the number of employees. So if there's 2 owners, 1 employee, they have to get workers' comp, okay? An LLC, the members of the LLC do not count. So you can have 3 LLC members and you don't have to have workers' comp. But if you have 3 LLC members and 3 employees, you have to have workers' comp, okay? Now, who here uses subcontractors? Anybody use subcontractors? 1099s?
Oh, no.
No, everybody's W-2 employee. Okay, if you have some contractors, a lot of times they're required to carry their own insurance as well. So you want to make sure if you're having someone who's an HVAC company, someone who is coming in and doing, if you're a massage therapist, you have massage therapists come in, you want to make sure most of the time that they're carrying their own insurance as well, because your business insurance is based on their insurance. Okay, so keep that in mind if you're talking to somebody. When it comes to going back to the employees, so let's say restaurant, for example. Let's say someone told you that the oven seemed really hot, and the material and the gloves that they were using were not sufficient, and you did not buy those gloves for them because they addressed that, and they not only got hurt, but they sued you. That's part of your workers' comp as well. So that's called employer's liability. So there's 2 pieces to workers' compensation. There's employer's liability, and then there's the state statute requirements for the employees themselves. Employer liability protects the employer if they do not do their due diligence to keep the employee safe. And then the state statute coverages is going to cover the employee. Now, as far as owners go, typically with most workers' comp, your owners are going to be not covered themselves. However, you can cover yourself. If you're going to cover yourself, the state limit for minimum payroll is $55,900. So no matter if you're paying yourself that or not, that's going to be what the payroll they rate on based on is, okay? Now, if you have separate health insurance, Diane, then you can obviously as an owner cover yourself, because workers' comp only covers on the job accidents, okay? Now, the next thing I see is going to be your commercial property insurance. So who actually has a business, leases a space, owns a location? Anybody else? I know you're going to own a location probably.
Yeah.
Does anybody else lease a space or an office somewhere, or does everybody else work from home?
I'm thinking about renting an office.
Renting an office? Okay. So commercial property, and this is gonna be something for you guys as well. Commercial property is gonna cover the loss of the stuff, okay? So anything that's movable is gonna be your business personal property. Anything that is, like you go into a space and you upgrade it, you add equipment, you add office structures, things like that, that's gonna be your tenants' betterments and improvements.
So it's almost like renter's insurance, but for business.
Basically, yes. Mm-hmm.
You have them for co-working spaces too?
Yeah. So if you're leasing a co-working space and you've got, 5,000 worth of desk space, you can definitely put that on business personal property. And then keep in mind too, when you guys do leases, if you ever go into a physical space, check your lease because managers, landlords are very common. It's called a triple net lease. Has anyone ever heard of that? So that means you're responsible for everything, even though you're not owning the space. So a lot of triple net leases, what they'll do is they'll put in there that you're required to carry coverage for the HVAC unit. I just saw one that requires them to cover coverage for the HVAC unit, the electrical, the plumbing, the drywall, the doors and the windows and the glass.
So
And they are
basically, if they
leasing
have
the
a-
space.
If you have a hurricane, they want you to rebuild that space.
They'll do the structural components of it, but they won't do the interior.
Yeah.
Okay, now keep in mind too, in North Carolina, commercial insurance, unlike personal lines, does not cover wind-driven rain. So if you're leasing a space and rain is being driven into that commercial building, that's typically not gonna be covered unless there is damage to the exterior of the building. Okay?
If you own the structure.
If you own, same thing, it's built into the policy form.
Okay.
Mm-hmm.
So you need a catastrophe policy for that.
So there's a few carriers that will give you like a minimum, like a little sublimit of coverage for wind-driven rain, but it's not common. It's not common.
So the best thing to do is to make sure I build the structure to cover that. So like in Alabama, we have the gold standard for roofing, so that it covers it for wind up to so many 100 miles an hour.
So wind and hail can be covered under the commercial property. There's a separate, it's called wind-driven rain. So wind-driven rain is when there's no opening in the outside structure to cause that rain to be driven in. That's not covered. Now, if the tree falls on it, a roof gets blown off, a window gets blown out, the wind-driven rain would be covered because there's a reason the water is entering the building.
You build it well.
Yeah, metal roofs are great.
Yeah.
Okay, so going back to property. So now let's say, for example, you're worried about loss of income. So you're leasing a space and you can't operate. Your building is damaged and you can't, operate your restaurant. For someone who works from home, it would probably be if your personal home was damaged and you had to work somewhere else, your homeowners is not gonna cover your business expenses. Okay, so you want what's called loss of income and extra expense. And that's a property coverage. A lot of people think it's general liability, it's not. It's a commercial property coverage and it's not typically included in your policy. It is an endorsement we have to add on.
Loss of income and what?
Extra expense. So loss of income is gonna cover if you, literally, it's the day-to-day expenses, payroll, renting, any kind of rent, any kind of utilities, things like that. Extra expense is gonna pay if you have to move that office somewhere, if you have to upgrade another office, if there's any changes that are normally above what you would get day to day to continue using your business. It's called extra expense. And how it normally works is that when it comes to extra expense and loss of income, you're gonna look at your daily monthly budget, including everything, so what you would need, and then you can either do it up to 3 months, 6 months, 9 months, or a year. And like I said, the loss of income and business personal property can't cover the stuff in your homes, so we can write it that way as well. Now, let's say you're transporting a bunch of stuff, right? So you've got computer equipment that you take on a regular basis with you, you have equipment that you take to your businesses to use, but you store them at your house. That's called inland marine. So business personal property is only gonna cover the stationary stuff. Inland marine is gonna cover anything that's transportable. Inland marine. It's gonna be a test at the end. She's like, just kidding, no. So yeah, it's called inland marine. So you can do portable computer equipment, portable photography equipment, anything that's portable that you're concerned about losing is gonna be something that you can cover under inland marine.
That's nice.
And it's not very expensive. It's pretty cheap to get it. Cause your commercial auto, so that's a little segue. Who uses their personal autos for business? Yes. Do you transport people in your vehicles?
Yeah.
Yes, you do. Okay, so typically your personal auto policy is not gonna cover any business exposure. Business exposure, if you wrap your vehicle, so if you have a personal auto and you've got a big wrap on it, don't do that, because your personal auto policy is gonna deny a claim. So if you have a wrapped vehicle, whether it's titled to your name or not, I would put that on a commercial auto. And then the cost of the wrap should be under customized equipment. So if you guys are wrapping your vehicles, make sure you're asking how much that wrap is, because you want anything above 2,000, you want to add on to the additional policy.
You wanna add, what's the name of the add-on to that?
Customized equipment. So if you have, if anybody has a truck where they've got the permanently installed equipment on it, you know, a lot of those guys have the ladder racks and stuff like that, that's going to be your custom equipment as well. But commercial auto is going to be written just like your personal auto would. You're going to have liability limits, medical payments, towing and car rental, comp and collision if you want. But it's rated based on the activity of your business. So if you're a restaurant, your rating is going to be a little bit lower than you would if you're a contractor, because you're not on the road as often. It can also cover drivers, additional company drivers. And something that also a lot of people do, if you own a business and you have employees running errands for you, you want to have what's called hired and non-owned auto liability. And it's exactly what it covers. So it's auto liability for any vehicle that's hired, so you're renting a truck, you're renting a vehicle, anything like that. I know a lot of people who are in sales rent vehicles because they drive, they don't want to put that mileage on their own vehicle, so that's hired. And then non-owned is your employee's vehicle. So it extends the liability limits. If they get in an accident while working for you, your policy would pay for their liability. It wouldn't pay for the physical damage of the vehicle unless you have that on the policy, but it would pay for the liability if they hit somebody else. So if you got sued because your employee was like, hit somebody and there was a big old, you know, sign on the side, that's gonna be your hired and non-owned. So that's commercial auto. But if you don't have a commercial auto, like you don't have any vehicles that you use for business and you truly do work from home, you can add that to your general liability as well. So that's gonna be a multi-use endorsement. Any questions so far?
Life insurance.
I know, isn't it fun? Are you guys having fun? No. Let's see. 14 minutes. Okay. All right. So that's all like the information, the definition. So I'm going to go on to what happens when you have it, and then a lot of people, the audit process. So a lot of people get a policy and they get to the end of the policy, whether that's for general liability or workers' comp, and they get this letter saying they want to audit you. And a lot of people get nervous about it. It's not a big deal. So what they're doing is they're going to ask, because remember at the beginning of the conversation we talked about you're estimating your upcoming numbers. This is the comparison against what you estimated. So if you have, general liability is going to be based on gross revenue, so your gross sales. So if you are doing, you know, $25,000 and for some reason you have this huge contract and it's going to give you a $75,000, let your insurance agent know, because we can endorse that midterm. So that's going to be your general liability audit, and it comes after the policy renews for the prior term. Workers' comp is based on payroll. So if you estimate $75,000 of payroll and you do $150,000, you're going to owe money at the end of the year. If you do less than what you estimated, you get money back.
So I was gonna ask you, is your team pretty good about reaching out to their commercial people and saying, look, your time is coming up, I know this, we all get very busy. So is your team good about reaching out to people and saying, okay, I see your time is coming up, you know, okay.
Oh yeah, I'm the one doing the commercial, so I'm gonna send you an email that says, hey, attached is your first audit request, please follow the instructions. Now sometimes, like, there's certain carriers that don't send me the notification, but I'm able to find it through our carrier system, but it just depends. But if I get notification of it, I'm gonna let you know. And I'm gonna hunt you down, because if you don't do it, the state will give you a non-compliance audit charge. And they can charge you up to 3 times your premium. And then if you don't pay it, you can't get another, they'll cancel your policy, and then you can't get another policy until you pay it or figure out the audits. They don't play, state of North Carolina. But yes, I mean, my team, I'm gonna send you anything. So if I got something going on, I'm gonna email it to you. I review leases.
I'll see you in the bakery anyway, so it won't be
Yeah. But yeah, I mean, if you guys have those, your agent should be reaching out to you for that, because a lot of people get commercial, and I mean, like, I'm sure my personal stuff, I get it and I'm like, oh, this is simple, I'll do that later, and then you forget to do it because we're all busy, right? So your agent should be reaching out to you. If you have questions on, you know, how to complete the audit, what questions, am I including myself or not? Those are things that we can definitely answer for you as an agent. And typically you can do them online. Now sometimes some audit companies are gonna call you, they're gonna wanna do a phone audit, and then if there's property involved, they're gonna do a physical inspection as well. But if you're working from home, they're not gonna come to your house, so don't worry about that. Any other questions on that kind of stuff? You mentioned spoilage, you mentioned loss of, you know, stuff. So that's actually something that's gonna be on your property policy. So spoilage is if like your, let's say your refrigerator stopped working all of a sudden and you lost everything, that would be spoilage coverage with equipment breakdown. So when we're looking at policies, all these questions, you know, I would have all those numbers together, because we're gonna ask you these questions and we're trying to find coverage for you that may not already come with the policy. Because a lot, personal lines, like this is what's covered under personal lines and this is what's gonna be excluded. This is what's covered under general liability and this is what's excluded. So we want to make sure that we're reading forms and making sure that things that are covered properly. So when it comes to a claim, it's going to be a process. It's not a claim for commercial is not as easy as personal lines. Another question I want to talk about with loss of income is if it's a peak season, say you're a restaurant, they're going to look back at your peak season numbers, not your average numbers.
Oh, that's good.
Yep. So if you're in a business where you have a peak season, you want to make sure that we're covering that, for that way you get that additional revenue. Any questions so far?
My philosophy is I'd rather have it and not need it than not have it.
Can I clone you, please? Thank you, ladies. I enjoyed